But let's get on board our guest. Rohit Srivastava was the founder of Strike Money Analytics and India Charts, joining us now. Hi, Rohit. Thank you so much. Good afternoon to you. Rohit, even though we are seeing a recovery coming in the market, but as far as Nifty is concerned, we are pretty range bound there. We are working with certain levels here. Do you see, a breakout from these levels? What are the levels that you are working with?
So we think that the Nifty has been in a meaningful downtrend. I don't think the downward trend has ended. We do have near-term resistance close to 23,300, 23,350. And most probably we'll see selling pressure again build up as we get closer to those levels. My sense is that we're probably headed back down towards 22,800 in the coming days. And that is what we need to watch out for. So this is sort of a dead cat bounce in what is an overall downward trend. And the downtrend is most probably, like I said, not over in Bank Nifty. Similar levels would be closer to around 49,100 to 49,200. I think in that range, we should see resistance, going forward, and probably another leg downwards could, start from there, and we could be headed towards 46,600 in the days to come.
Those are the levels you are watching on the charts, but also tell us, Rohit, what is the outlook when it comes to the broader markets? Because every time in the recent days that we've seen the markets in the green, it has been largely the broader markets that have supported this rally, especially yesterday and today also the broader markets are outperforming. However, last week when we were in the red, it was the SMIDs that were taking the biggest cuts as well. The kind of volatility that comes with the broader markets, would large caps be a good bet right now, or are you seeing some show of strength coming in from the broader markets also right now?
What you're saying is a day-to-day thing, like, markets are bounced today, so mid caps are rising more. But when the days when they're down, they've fallen much more. So if you actually start doing a 1 week kind of analysis, then you'll probably see that, the worst performers are coming in the mid and small cap segments. I mean, they've been down around 5 to 6% is what I'm seeing on the screen for the mid and small cap indices, which is much more than what the Nifty itself has actually done, which is only around 1.89% on a 1 week basis. So that's the big picture, that if you remain in a downtrend, the broad market, the mid and small caps tend to fall much more. Though on up days, you might see them bouncing a little more. That's just the high beta nature of the segment. So if you're overall in a downtrend, you will still see that segment fall. The contrary is that the large cap, which is the Nifty itself, having fallen less, is it going to catch up with the mid caps in terms of the sell-off? I do think that should happen, but you cannot always be certain. Sometimes the Nifty holds back a lot longer than the broad market. We saw that in 2018, 2019 for a long period of time. Nifty only gave up much, much later. But I do think, at least in this leg, into the budget, as we are going, into the second half of the month, you have the, swearing in of, Donald Trump also coming up. All those uncertainties, I think, would keep the pressure on the downside, and possibility that, large caps also sell off slightly more harder than they have so far. But that's not going to stop the mid caps from falling.
Right, Rohit, let me come to you about Nifty Bank, because Nifty Bank, as I can see in the last 3 days, it has been, moving past the previous day's high. Is Nifty Bank going to lead from the front, the recovery? Because Nifty Bank has been outperforming at least the benchmark yesterday. Also, we saw a bigger recovery coming in on Nifty Bank, and today also Nifty Bank has been an outperformer.
Yeah, so it's held up again well here, but on a over time it's fallen more than the Nifty if we just take the last 5 to 10 days into account. I think if there is any segment that can hold out, it's possibly FMCG, because it fell the hardest at the beginning, and it has come back. The FMCG index is currently at around 55,300. It's taken support at this level 2 times in the past. So we will watch it closely. I'm not saying we are already done and this is, final, because sometimes what the market does, it shakes out weak hands. It may break the 55,300 level for a day or two and then rebound. So we just need to watch that, whether it happens, because that's where I would probably look for the possibility of some kind of near-term outperformance on a 1 to 2 week basis, provided the level holds. So we need to see it actually happen. But that's, I think, the only place. Otherwise, rest, other than that, I think banking is still weak, doesn't show signs of a bottoming yet.
Before we let you go, I just want to get your view on a couple of stocks, and I don't know if you're tracking these counters, but it's Dixon Tech and BSE that I want to talk to you about on the charts. We've had brokerage notes coming in on Dixon today, very bullish note. BSE, couple of days brokerage notes have been coming in. Dixon in particular on the charts has seen a massive run up over the last 1 year. Do you believe that kind of momentum can sustain for a company like Dixon on the charts, given how much it has already rallied in the last 1 year? And also your perspective on what BSE is looking like on the charts.
Well, I can't really give stock specific comments because we are really not investment advisors.
Well, on that note, we'll let you go, Rohit. Thanks so much for joining us, and thanks once again for joining us on ET Now. But let's also.
If you like this video, then like, share and subscribe to ET Now.